today's Commodities Corner, presented by myself, Phil Carr, at the Gold and Silver Club. Today we will be going through live market analysis. We will go through a watch list of trading opportunities. We will provide a forecast of where we expect gold, silver, oil to be heading next. On questions, and of course, we will be providing live support. Any questions or comments throughout the session, do please keep those coming in the chat. So to get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agricultural markets, they are routinely sought by financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Of course, it's a pleasure to be here as well on binary.com. For further information on the Gold and Silver Club and our expertise, please visit www.thegoldandsilverclub.com. Into it before over to the charts, we'll go through several news items as well. Just a quick overview of where we're sat with context of the markets year to date right now, 7th of April at the moment. We're into the second quarter. We're into a new month. How are the markets performing so far? Well, overall, the markets are currently up in the current way. So palladium is over 16.5% so far in 2017, the best performing commodity actually out there, followed shortly after by silver, which is up over 12%, then the Nasdaq, which is up over 11%, gold, which is currently up 7.4%, has had another surge this afternoon as well. We've also seen other markets performing over the course of 2017, which of course includes the stock markets, the S&P 500, the Dow Jones as well. Some of the weakest performing markets over 2017 so far have been natural gas, which is down over 18%. We've also seen sugar down over 14%, oil, WTI oil, and also Brent crude oil. WTI crude oil down over 9%, and Brent crude oil down over 8%. So it gives you a bit of an idea of what the trends are at the moment, or certainly how they've performed so far, how the markets have performed so far in 2017. So today we've had several news items come out. Also, we've seen gold break out and hit a 5-month peak after Trump has launched a missile strike on Syria, which a lot of you are aware of has caused a lot of volatility in the markets today. We've seen gold, silver, a number of other markets break out to the upside. A lot of volatility over the course of today so far. We've also had the non-farm payrolls, which again have caused volatility. The US dollar initially soft significantly. It's completely retraced again, so there's a lot of chop today. And what I would suggest is you want to wait for some of the volatility to settle and look at prices towards the close today to really give you a good idea of how the markets are going to move as we go into next week, because we're still seeing a lot of volatility at the moment. The non-farm payrolls came in a forecast, so they came in low expectations at 98k versus 180k forecast. But what is important to note too is the employment rate has dropped from 4.7% to 4.5%. Often what you get is a knee-jerk reaction off the back of the actual non-farm payroll numbers, but afterwards, as traders start to digest the data, they also look towards the unemployment rate as well and recognize actually that's an improvement or unemployment, and therefore it's a bit mixed, the reaction that you see in the markets. And that's why initially the US dollar, which I'll show you on the chart shortly, shot down and it's come all the way back up again and retraced as well. And this afternoon at 5:15 p.m., there's not a lot of news items coming up now, but we've got one of the FOMC members speak this afternoon at 5:15 p.m. Got at 6 p.m. today the US Baker Hughes oil rig count, which will of course that affect oil. Now, into some of the major scheduled news items that we've got coming up, the most lucrative trading opportunities that we see over the course of this month. First round of the French elections, also the European Central Bank meeting, which is occurring over the course of April, towards the end of April, on the 27th of April. These provide a lot of volatility. As we go into May, we've got an FOMC statement, the OPEC meeting, of course, which will have a big impact on oil as we go into June as well, the FOMC meeting, and also the European Central Bank statement again. So we've got quite a lot happening in the weeks to come. Today is certainly a volatile day as it is. So have a look at this. Essentially, I'll be going through the best way that I see to trade these sort of moves in the market, and that is via using the up and down, higher and lower trades on binary. Very simply, for this sort of trade, you select higher, you win the payout if the market exit price is strictly higher than the entry price. Very simplistic in that way. So all you need to do is really get the direction right, get the duration right, and of of course, get your exit and your timing right. So the three key points when we're looking for this sort of trade, and it's perfect actually for conditions like today where you don't want to have a big stop loss or a big take profit target on your trade. You just want to catch the smaller volatility moves because we're seeing these big whipsaw moves at the moment, so favouring just being in and out the market relatively quickly. Some of the trade opportunities and how to really best trade these. If we have a look at gold, for example, gold today has been hovering in and out of 1265. It broke out this morning, it retraced again, it broke out on non-farm payrolls, it's retraced again, it's sitting around the 1265 zone at the moment. So essentially for this sort of trade, whether we look at higher or lower, we'll look at the trade shortly. We're in the duration of the trade, so for example 5 hours, so therefore we would be out before the daily close today. Start time now, payout here you can see 5,000, and very simply the stake on the trade 2,854 if we were looking for the price to be higher over the next 5 hours, and that would be for a payout of $5,000. The stake for the price to lower, a stake of £2,860 for a £5,000 payout. If we correct and the price does close lower within 5 hours. So that's how we would work out the trade. So you would execute the trade. Next, you look at the direction, you look at the exit time, and ultimately you just want to get the direction of the market right, and you also, of course, want to get your entry correct. So pick a good entry and then the exit as well. So forward way to trade the market allows you to trade a lot of volatility without needing to get hundreds of points on it in order to get a good risk reward on a position, and allows you to be in and out of the markets reasonably quickly as well, needing big stop losses and take profits. So it's certainly a great tool to have in your trader toolbox. So guys, we'll move over to the charts. Hopefully you can hear me okay as we go over to the charts. I'm just going to go ahead and check my screen. So for a brief period of time, you might just lose sound here. Hopefully you won't lose all the sound here as I move over to the charts here. So do just let me know if you could just confirm that you can hear me okay. That would be fantastic, guys. So just a quick check in again. You can okay. You can see my charts okay. You can see the screen okay, guys. Would be great if you could just confirm that. That would be perfect. So just a quick check in, guys. You can hear me okay. You can still see the presentation okay. Unless otherwise stated, I will assume that you can hear me okay. Right. Okay. Good. Right. So first of all, start off with gold. Actually, I'll tell you what we'll look at first. We'll have a look at the US dollar index here. So this has been an amazing move today, the US dollar. So the US dollar broke down, had a big move to the downside today. We saw a big sell-off off the back of non-farm payrolls, which we would refer to as the knee-jerk reaction. Immediate sell-off, so the headlines would be that the NFP numbers missed the forecast, big expectations in a big way. However, it then over to the unemployment rate, which has been positive essentially, and we have seen a retracement here. We're back above the 50-day moving average. The US dollar has created a very large dragonfly doji on the daily chart. A lot of volatility here, and it's about the close today. We're back above the 50-day moving average. Big rejection candle on the daily chart here. If this is like this today, it has the potential to go higher as we go into next week as well. On the weekly chart here, we're building up some momentum. US dollar could see a full-on move all the way back up towards the upper end of its trend channel here as well. So I am watching out for this. The US dollar index, the way it's moved here, and if it does close like this with a strong close back above the 50 MA, big rejection candle on the daily chart, it will cause some pressure to a number of commodities, which we need to keep an eye on. Now I'm just going over to gold. Gold for me today is very much a market that we need to watch into the close, because there are certain points here that into the close we will have a confirmed move to the upside if gold closes above the 1265 zone today. So we've had a major level of resistance. If you can see this on the chart here, we've had 1263.93 was the pre-swing high here on gold. So if we just draw this on the chart, you'll be able to, it's just around the major swing high going back to end of February. That level has been taken out. We've also broken above the 200-day moving average today. So we've certainly had a lot of pressure brewing here. A lot of stop losses would have been sitting above this level from sellers in this market. Even overnight, we saw a spike to the upside for gold on a safe haven bid here off the back of, again, Trump launching a hike on Syria, which has caused gold to be bid up for a safe haven here. So at the moment, I'm watching gold very carefully here as to whether we'll get good follow through. We've got a V-shaped reversal pattern in development here, and as to whether this will just continue into the close today, and we could continue this momentum to the upside as we go to next week. So that's what I'm watching out for. Now, the fact that the US dollar is so strong and it moves inversely gold price could put the brakes on this move to the upside at the moment with gold. We need to watch it very carefully how it closes today. Also monitoring gold euro, which tends to lead gold against the US dollar. As gold versus the US dollar has broken out, it's broken out to 5-month highs here very clearly at the moment. It's above the zone currently, but it's possibly a little bit of an indication if gold euro is unable to get above this swing high on a closing basis to the left here, the February highs, and if it produces a rejection candle into the close, if it's just a quick spike high, and if it's off into the close here, it could mark a top here for gold. It's something I've got on the radar at the moment. The way gold typically tends to base is it will consolidate and then it will slowly but surely edge up. We've seen this a number of times before. It will form these basing patterns, but surely surge up in price, and then you'll see a base get put into the market. It gives you an idea that it's a good time to buy on these slow and steady moves. The way gold typically sells off is normally from a spike high. It will have some sort of, I can show several of these to you. Normally when we put in high for gold, as had in Brexit, the US election, we normally get this spike high breakout to the upside. Traders, they buy a little bit too late into the trade. They buy right at the daily highs here, and then they get potentially trapped into a buy only to see the market turn around, retrace, go in the opposite direction, and then in fact it becomes more apparent that they should be shorting this particular market after a top rather than going on the buy side. Now the jury's out on this. It really does depend on where gold closes today. If gold closes above the 1265 zone, it's above this level at the moment. If it closes, for example, if this was the close today around 1267, it suggests that gold's going higher next week. On a week closing basis, it will start to get breakout of a major channel on the weekly, and also if we go over to the monthly chart here, you'll note that on the monthly, we've also had a very strong rejection candle form last month, and we've already cleared of last month's big rejection candle, hammer and dragonfly doji, and we're building up some momentum to the upside. But gold would still need to have a strong close in order to confirm there will be more momentum as we go into next week. And if the US dollar continues to rally here, it could put the brakes on this move on gold. So I'm watching this very closely. Gold has been an okay move today. I mean, in terms of the breakout so far, it's managed to get up to 1270. It's not a runaway move by any stretch at the moment. Maybe this will change later on into the close, but a runaway move would see gold get up to around the 1280 zone. It would see more of a breakout, more of a follow-through. It's a little bit at the moment, gold to get much higher. You can see even at the moment, we can put it into tighter time frames. A while here. We've got some rejection candles forming. 4 hour, you've got several rejection candles forming. It really depends on how this forms into the close today. So essentially, should you be looking for a buy? Should you be looking for a sell? Ultimately, we're awaiting confirmation towards the close today as to whether we should go for a buy and take advantage of more upside next week, or potentially if it closes back below the 1265 zone, and in fact, if I show you 1265 on my chart, or if it closes especially back below the 200-day moving average today, that would indicate this is the spike high, and actually we should be selling rather than buying, as likely it could roll over as we go into next week. So watching this very carefully at the moment to see how things develop on this market. Now, if we go over to WTI crude oil, this market had quite a significant breakout overnight as well, off the back again of Trump launching a missile strike on Syria. We've seen oil have quite a significant pop to the eye. Certainly short term at the moment, oil is overbought, but it's getting back within its previous range, which was between $52 per barrel up to 55 here. So we're within this trading range, and had a very impressive comeback oil over the last couple of weeks here. First of all, managed to get a full-on retracement here after we broke all the way down to $47 per barrel, get above over the last week and a half here, getting above the 200-day moving average, the 21-day moving average, and over the last 24 hours, breaking, closing above the 100-day and the 50-day moving average, all important levels. So there is, to a certain degree, clean air here for oil to continue to follow through to the upside, as long as it closes within this trading range back above $52 per barrel. So watching the possibility that oil is going to have a continuation pattern here. Of course, if it does close with a large rejection candle on daily chart, and if it was to close back below these key moving averages, so if it was to close with some sort of rejection candle here, it might then start to come back and retrace as we go into next week. If you are monitoring oil here and you're looking for trading opportunities, I would definitely suggest look at the weekly chart, because the weekly has really led the way here. If we have a look at the weekly chart here, you will see support at the end of this trend channel. So several bounces, 1, 2, 3, 4, and you can see parallel channel here, support resistance. We're just been ricocheting between these levels. So ultimately, at the moment, I'm watching these levels very closely right now for oil here to see if we will get additional follow through. This previous range for oil, we traded between the by open, high likelihood if it closes above the 50 MA to continue to go up next week. I suggest that will put pressure on gold and silver in the near term going into next week. So we'll be looking for trade opportunities as a result as we go into the close today, short-term opportunities, and then, of course, Monday as well, we'll be looking out for some setups too as we go into Monday session as well. So just to put that on your radar for now. And I would also, of course, be watching gold very carefully here. We've got a few to go. Just go over to the gold market again. You can see that on the daily chart. We have had a breakout and a surge to the upside, but gold needs to close above these levels, above 1265 to 200 MA, in order for a continuation pattern to develop on this market. Also, I'll put on your radar platinum. Platinum's looking quite interesting at the moment. So platinum has had a breakout of this pennant formation. We covered this actually during today's roundup prior to non-farm payroll for our members at the Gold and Silver Club. The fact that platinum is looking very interesting, this pennant formation, but platinum by its nature tends to be more of a volatile market. We wanted to wait for the close to get more confirmation as to whether it could break out and surge. You can see it's broken out as well, like gold has, but it's retracing again here, forming a rejection candle on the daily chart. If that really starts to escalate this retracement, we could start to see more momentum to the downside. A market that I am quite interested in right now for the buy side is actually the S&P 500. If you have a look at the S&P 500, this little dragonfly doji, which is developed on this chart, you can see big rejection, 50-day moving average, underlying trend channel on the S&P. I'm looking for the potential of more upside, particularly if the US dollar really gains strength today and it looks strong as we go into next week. The S&P has been seeing this level of support around the 2340 zone 4 times over the last week and a half. Every time it's held support, it's back at the also the 50-day moving average, the lower end of the trend channel, bid back up again today. Dragonfly doji on the day chart. I'm looking for follow through on the S&P, and again that could be a position that you look at in and out on a quicker trade for the price to be higher, and also looking at this as we go into next week for potential trade opportunities. Usually, from seasonal bias, the stock markets, especially the US equities, do tend to favour upside as we go into Easter. Of course, next week being the Easter weekend, we could see some additional momentum to the upside here if we see equities follow their overall seasonal bias over the month of April. So the main markets I want to cover with you at the moment. Still, I'm watching this for a potential bull trap and see if it does retract. Gold as well. I want some more confirmation. We'll be watching this over the next few hours to see whether it can follow through or whether it reduces. The S&P 500 is having some potential upside, especially if it can break above yesterday's high here, get above the about 63 zone. It should start to build up some momentum, possibly break out from this pennant to the side. Also, bear in mind the overall structure of the US dollar index at the moment, which has performed a large rejection candle here on the daily chart. So you can see that right now, big dragonfly doji, which is developed here on the daily chart. So exciting times for the markets. There's lots going on. Today will be important as we go into next week to confirm how the markets are going to close here as we go into next week, and ultimately will determine likely the direction as we head into Easter as well, based off days closes. So it's quite an important day for the markets today. So do make sure you keep abreast of what is going on. Now, if you like today's analysis and you would like this on more of a regular basis, if you'd like to join us during the week at the Gold and Silver Club for live trading rooms and also get access to all the trades that we are taking at the Gold and Silver Club, very simply, you can make an application to join us just by going to www.jointhegoldandsilverclub.com. I will put a link in the description here for you. Okay, the link to join the Gold and Silver Club. Once you've completed the application, a member of our team will be in touch with you regarding your application. And does it involve, right, what is the Gold and Silver Club? Let me just talk you through it. I'm a member of the Gold and Silver Club. If you enjoyed today's analysis, you want more regular updates, you want access to our trading strategies, our online training courses, our trading rooms during the week, recordings of every session, live trade setups ready to implement, notations of every trade that we get into, exit, entry, stop loss on each position, the inside track, a week ahead trading plan, and watch list every week, and access to our Private Traders Academy members website. If you'd like access to all of that, which includes the following: live trading room webinars throughout the week, notifications via email and SMS of every trade that we're getting into, and trade management and commodity research and market insights. Again, all you need to do, guys, is go over to www.jointhegoldandsilverclub.com and complete the application form. Okay, fantastic. So with that, guys, I wish you good trading. Have a fantastic weekend. Good luck today, guys, and wish you a very, very profitable day. We'll definitely catch you on the next one, and take care, guys. Okay, all the best, and have a great one. Okay, thanks, everybody. Take care.